All right, before we get into this lesson, just wanted to remind you that there are lecture notes that go with this. So make sure you download them because on your screen, I can't fit all of the information that you need. So you may want to have it in front of you so that you can follow along. So here we go. We're going to go through an example here with specific ID. Here's our example prompt. Company A is a wholesaler who buys machines from a local manufacturer and sells them directly to customers. Company A has purchased 5 machines to sell to their customers, and the information is shown below. So we've got machines A through E, we've got their cost and their sales price. In the month of January, Company A sold 2 machines. They sold machine B and D to our customer. What is the cost of goods sold for January, the ending inventory, and the gross profit for the sale of those 2 machines? What is the journal entry that needs to be made at the end of January? Okay, so we've got a lot of things that we got to look at here. So we need to find the cost of goods sold, the ending inventory, as well as the gross profit, and then the journal entry. So let's take a look at just the cost of goods sold, ending inventory, and gross profit. So let's do cost of goods sold first. So what we're trying to figure out is how much are we going to move from inventory to cost of goods sold. We're using specific ID here. With specific ID, we need to link the cost with the specific item. So in this case, we sold merchandise B and merchandise D. So B and D would be the 2 costs that we are going to move from inventory to cost of goods sold. So if I do the math here, we're going to add up the cost, $12,800 plus $14,350, and that's going to give us $27,150. So $27,150 is what we're going to move from inventory to cost of goods sold. So what would our entry look like? Well, I'm going to give you a preview of it because we have it here, and then we'll actually do the entry. So we are moving $27,150 out of inventory. So I'm going to credit inventory $27,150. And so that's a credit, so I need a debit. So we're going to debit that into cost of goods sold. So $27,150 would go to cost of goods sold. So our cost of goods sold, we have no other transactions, would be $27,150. Now, what about our inventory? So our inventory balance right now was $68,950. We credited $27,150. So if you do that subtraction, we get $41,800. So in inventory, we still have $41,800. And if I wanted to check, I can add up A, C, and E to see if that equals $41,800. I'm pretty sure it does, but you want to check my math on that because I could be wrong. All right, so once we have that, now we need to calculate. So that is our ending inventory. So we've got cost of goods sold, ending inventory, and we need our gross profit. How do we calculate our gross profit? We calculate our gross profit by taking our total sales price and subtracting it from our cost of goods sold. So the first thing we got to figure out is what is our total sales or total revenue. So our total sales, total revenues, looks like we sold machine B for $21,000 and machine D for $24,000. So if we add up those two, I get $45,000. Now I just need to subtract $27,150 from $45,000. So $45,000 minus 27,150 gives me $17,850, and that would be my gross profit. So let me run through the numbers here really quick. So our cost of goods sold is $27,150. That's how much we moved to cost of goods sold based on our specific ID costing method. Then we needed our ending inventory. Our ending inventory, by taking $68,950, subtracting $27,150 from it, we get our ending inventory of $41,800. Once we have that, then we can calculate our cost, our gross profit. Our gross profit, we take our revenues minus our cost of goods sold, gives us our gross profit. Well, our revenues was $45,000 from selling both of those items. We subtract $27,150, which is our cost of goods sold. That gives us a gross profit of $17,850. So we did pretty good because we made a profit of over $17,000. Now, that might not necessarily be good because we don't know industry data, but if you got an extra $17,000, I'm pretty sure you'd be happy right now. All right, so let's look at the journal entry associated. So the journal entry is going to be based on the cost of goods sold one. So $27,150 is how much we kind of moved. All right, so let's look at our entries here. The sale of the good is the first thing that we need to deal with. So we know that we sold both of those items for a total of $45,000, $21,000 plus the $24,000. So we are going to debit, and it doesn't really tell you here, so we're just going to make an assumption here for example purposes. We're going to assume that we got paid in cash, which is a good thing. So we're going to debit cash for $45,000. And then we're going to credit sales revenue because what gave us the $45,000? By making a sale. So credit sales revenue. And since revenue is increasing, we credit it. So that's also another reason. And then cost of the inventory. So the cost of the inventory to us was $27,150. So $27,150. We're going to debit cost of goods sold like we did in the previous example. Cost of goods sold for $27,150, and we are going to credit inventory for that same amount. I can't write my fives, but that's okay. So that would be our journal entry. Debit cost of goods sold for $27,150, credit inventory for $27,150. Remember, when we're making a sale, we have at least two entries to do, one for the sale, one for the cost of goods sold. So that is a comprehensive look at a specific ID example. Really, it's not difficult. You have to go step by step. So if you're not patient enough to go step by step, you're going to mess up the calculations. Now, specific ID, we are linking the specific item that we sold with its cost. If I don't have that information, I can't do specific ID. That's why we use this for low volume, high value dollar that we can usually track with some type of serial number or letter or whatever, some type of tracking tool so that we can track that item to its actual cost. So that is a look at an example for specific ID. Hope you enjoyed this lesson, and we'll see you in the next video. Hey guys, if you like this video, make sure you press the like button below. And if you're looking for worksheets that go along with all of these lessons, head over to my website at patrickleemsa.com or clicking the link in the far right. And I've got your next lesson right over here. So just click that link and it'll take you to that video. So until then, we'll see you in the next lesson.